And welcome to episode 8 of CFE, Consumer Financial Education, with myself, Dylan Hartland, alongside Lerato Jaxa from Heartlines. Today on the show, we're going to be talking about how we need to understand credit and how credit applies into our financial well-being and health. And if you're familiar with the series we've been running here on Impact Online, CFE, we've been busy talking about money, lots of things about money, different aspects, budget, savings, all these different lovely things. And you can go and check out all the past episodes if you have not done so already. But thank you so much for tuning in to this live stream right now. And if you want to engage with us throughout the show, you're more than welcome to do so below on the comment section. And also, if you know of anyone who can benefit from good Christian content, as I mentioned last week, this is just the beginning. We're busy brewing up a bunch of different shows that we're going to be releasing later on in this year, all live stream shows, because we want to make sure we can engage with you live as we conduct things here on YouTube. That being said, mark your calendars. Next week, Tuesday, we've got something special lined up with two other gentlemen. It'll be two other gentlemen and myself, Jose Rankomise and Tondi Rambani, as well as, you know me, Dylan, right? We're going to be hosting a show every Tuesday from 6 to 6:30. We don't have a name for the show yet, but don't worry about that. Those are the small things. But we're going to be doing that next week, Tuesday. So make sure you mark your calendars, watch us live. We'd love to hear from you throughout the show. We'd love to hear all your different comments and what have you. It's going to be a very laid back show. So it's going to be something a bit different to what we're doing here. This is obviously when money comes into the situation, it's very formal. You need to make sure that what you're saying is the right thing. Whereas what we're saying there is going to be a lot more laid back, more of your comments, more of our personalities and those funny things coming through. So we'd love for you to tune in on that one. And also, if you know somebody who would love to watch us and would love to, just engage with us, be sure to advise them, because we're talking about finances now, advise them to subscribe to our channel, as well as hit that notification bell so that they're aware when we go live. That being said, let's jump into this episode. It's the 8th one. We've got 2 more to go. The next 2 weeks are also going to be very insightful ones, as the past 8 weeks have been. And today we're talking about credit. Lerato, thank you so much for joining me once again.
Thank you so much. I'm so glad to be here.
Yeah, it's great to have you again.
Yeah, it's been an awesome journey to be here.
Definitely, yeah. And like how you say journey, we've sort of been going on this roadmap.
Right, it is.
Just long journey, long distance journey. For some reason, I had this picture of like when you go on a long journey and you're forgetting things along the way. So you stop at a garage, put petrol in, you stop at a spa, you need to grab some bread and stuff. You stop at another place. And
that's how you have to look at the relationship you have with money. It's a journey, because we are not perfect when it comes to money. So at times you need to stop and just reevaluate and make sure that, those are stops. So it is a great journey for
definitely. Fortunately, we've covered budgeting and having a plan in place. So I think people are familiar with how important it is to have a budget. So that you don't, your car doesn't just pull off the road without you knowing. You know where the money's going and where it isn't going. And I think something today on this episode rather is something I'd mentioned a few episodes ago about I had a misconception about credit and how I always saw credit as like a negative thing. Credit was you borrowing money from the bank, and then the bank was after you for the rest of your life. You could not get away from those payments, the installments. You were just, and the interest was like, I don't know, 30% per month, whatever in my eyes. You ended up paying way more for something that you bought. So I had not that it wasn't anybody's fault. It was just my own understanding about it. And I wasn't really interested in getting.
You are not the only one. There's a lot of misconception about credit. So it's looked at in a very negative view, and yet it isn't. Actually, credit is there to help us. It's just that when you mishandle it, then it will affect you negatively.
Right.
So it's important that when you have credit, you handle it with a lot of respect for it. Or rather, a respect for the agreement that you have with the financial institution that you have credited from.
So I think let's kick things off. Understanding what exactly is credit for someone who's not that familiar with it and maybe has a misconception about it, how they've been raised or how they understood credit. I think let's maybe start unpacking that a bit, and then, people can understand that.
Yeah, so when we talk about credit, we talk about the ability for you to buy something or to get a kind of service without you paying money, but somebody else paying it on your behalf. That is credit, is using money you don't have to get service that you need right now. And then this situation is created out of trust between the two parties, trusting that I'm borrowing you this money right now because you need it right now for this particular thing that you want right now. You will then later pay me back that money. That's what credit is.
Yeah. So it's someone paying for something you need on your behalf.
Right.
Now.
Yes.
But it's the same thing I said last week, you know. You can either pay now and play later, or you can play now and pay later.
And how, yes, but how you said it was from a different...
It was a negative side.
No, was from a saving side.
Yes.
Okay.
Yeah,
from the saving side.
Yes,
but this time around, it's different. It's when you are borrowing money, you don't have to buy things you want right now.
Yeah.
So it's buying now and paying later, basically.
Yeah.
So that's what it is. And one thing that people need to understand is that it's important that when you go for credit, you know that there is an agreement or a contract that should be there between you and the person that is borrowing you money.
Right.
So this document will then have your personal information, who you are, where you live, your ID number, and all of that, and then it will also have the business's information, and then it will also talk about the terms. So the terms would include things like, you will pay us back on the 28th of each month, and this would be the amount every month. And these are the fees, the credit cost that goes with that. So one thing that people need to know is that credit is not free.
Yeah.
So when you ask for money, when you borrow money, there is obviously some fee besides the money that you borrowed that is going to be part of your monthly installment.
Right.
So it's important that people read and understand their credit agreement. What does it mean? Interrogate it. Because one of the problems is that we go to the bank, and I've said this before, we go to the bank when we don't have time. We are always in a hurry.
Right.
You get there because of this is money that you need now. You go there, you ask for money now, and you just sign the contract without even understanding what you are signing for.
Yeah.
And then when the monthly installment is debited from your account, then you are surprised.
Yeah.
Why is so much money going out?
And you wonder where your money disappears to.
Right.
Yeah.
So it's important that you understand that. It's important that you know what costs go with the credit.
Yeah, and I think we also want to debug the misconception at the end of the day that credit is not a negative thing. It isn't. Credit is there to help you as well, because I think the perception that's seen when we think about credit is sort of what you mentioned as well, where you're buying something you want, but you don't have the money for it. You're using credit to do that. So I think the misconception is people will never be satisfied. For one, you're always chasing. I remember when Jeff Taylor was here and we were speaking about trying to live a lifestyle that's not yours. Mm-hmm. You're trying to portray a life that is not actually yours, and you're using money that you don't have to impress people that aren't actually your friends, and all these different things that it can spiral into. But this evening, what we're saying is it's not a bad thing. Credit's not a good thing. But the misunderstanding of credit is a bad thing.
Yes. So credit is not a bad thing. Yeah. And just before I get into that, I just want to also just bring this in that there are financial institutions that we borrow money from, which is great, and it's safer to borrow money from the registered financial institutions. But also we know that amongst friends, amongst family, we also have borrow money here me, my friend, please borrow money because we're looking at, my friend will not charge me interest and stuff like that. And one of the mistakes that we do as people is that we have a verbal agreement and there's nothing written down. So it's important that when you have that kind of a situation where you are borrowing money to a natural person, from natural person to natural person, it's important that you write those down as well and have a certain kind of an agreement, agree on it, or sometimes also have a third person to be, to hold you guys accountable.
A mediator,
a mediator, because a lot of people end up fighting or not getting along because of somebody's not paying their money and there's nothing to refer to.
Yeah.
So it's important that we write those down as well. And just going back into the question that you ask about credit. So credit is not a bad thing, I keep saying. Just like I said, how you handle it will then determine. As we were taking this journey into understanding this financial content, I did mention that we need to be money-wise in a way that you do not take credit you didn't plan for, because taking credit that you didn't plan for will then have that impact on you. A negative impact because you didn't plan for it. We therefore don't have enough money to pay it back. So but the advantage about credit is that it allows you to buy things you cannot afford now and you can get them now. And we know how nice that is. You want a car, you can't afford it now, but somebody says, hey, I'll borrow you money for that. You get it now. And then it helps you build a credit history. We spoke a lot about credit history some time back. So what credit history is you are basically building a reputation. It's a financial reputation for yourself. You are saying to a financial institution, you can trust me. You see, I've been paying as I have agreed that I'll be paying. So you are building that history. And then when your credit history is in a good space or a good shape, then that will then give you later on in life or when you are ready, the ability to afford a home. I mean, not many of us have like R1 million to buy a house of our dreams. But if you create a good and a healthy credit history, then because of that, you will have the opportunity to apply for a home loan and you will have no hassle because of you've been clean. And when I say being clean, that means you would be paying your premiums as you had promised. If you said you will be paying on the 28th, you pay on the 28th and you pay the amount that you have agreed on. And then if somehow it happens that you are not able to work, and you can't work anymore and you've got credit, it's important that you liaise, you communicate with people that you owe and explain your situation. Take the documentation that proves your situation. Because one of the mistakes that we do is that when we have a change in our finances, then we keep silent and then they call us and then we don't answer our phone. It's as if though the people that we owe are bullying us. But we didn't communicate what we were supposed to communicate when. So it's important that we do that. And another advantage about credit is that you can use it for emergency. If you don't have that emergency fund that we're talking about, you have an emergency and you've got access to credit, then you can use it for that. Yeah,
it can help you out of a difficult spot. Now, something that I was thinking about, we've also got a question about it as well from Direct to You in the comment section on YouTube. It's saying, he's asking, do you recommend a lay-by instead of the idea of going into debt? So lay-by meaning that you agree, I'm going to pay for the next 6 months for this item. After those 6 months are finished, then I get the item. Whereas credit is the opposite idea, right? I'm taking it now and I'll pay for 6 months, whereby you're going into debt. So I think it's quite an interesting question. What would your thoughts be on that?
So, two things. One, I always advise people to stay away from unplanned credit. So if this is credit that you didn't plan for, stay away from it. It's better for you to lay by. Another thing that you need to be aware of is that you need to build a credit record for yourself. You need to build a credit history for yourself, so that when you are ready, or when time is right for you and you want to buy a bigger purchase, or for the value that you don't have in your account.
Yeah.
So the credit history, or you having a credit right now, will then help you and assist you later on. Because like if you don't have any credit history, for instance, and you go to a vehicle finance and you say, no, I want to buy a car, it's 120,000. 120,000 is a lot of money. So they cannot just give you 120,000 because they don't know your reputation in terms of your paying back. So they'll ask you, you need to build credit history first before we can allow you to get so much money.
Yeah, I think it's sort of in the concept of when we think of finances and stuff, it's basically your life on a record, basically saying if I come in and you, maybe Lerato, you say like Dylan's a great guy, what have you, but if I go to a company, to buy a car and I want to get finance for it, that company couldn't care if I was the best person on earth,
right?
Because they don't have pay.
Yes,
yeah,
so they don't have any kind of history about you in terms of credit. So credit, it
works both ways. If you've got that negative one, then you could be a lovely person,
right?
But if they see that you're not someone who's diligent,
trustworthy,
then they're not going to grant you that credit. So I think that's one of the massive disadvantages, I think, of credit when I think about it, is that you can sort of fall into this place of misusing funds, first of all, overspending where you shouldn't be overspending. And then you can almost read, like, I suppose it's like the last line, but you could almost be blacklisted in a way as well.
Yeah, definitely. Yeah. And so we need to know that, like I said earlier on, that credit is not for free, Dylan. So when you take credit, that's why it's important when you plan, when you have your financial plan, you must plan for credit, because of credit you are not, so say for instance you are borrowing 1,000 rands. So with credit, 1,000 rands will come back with like maybe 250 or 300. So you'll be paying a little bit more than what you borrowed. So it's important that when you take credit, you watch that. But also, this is a norm in a way that a lot of young people after college, they're excited and they get a job, and the first thing that they do is to get a credit card.
Right. And
then it goes back to what you were saying about then they spend recklessly and they don't think about it. Yeah. And then they realize that they are so deep into debt and they are unable to pay back the money. So the saddest thing, and some people who might have seen or heard a story of or similar to this, where a young person is doing well, but prior to them being at that point, they've had credit, they didn't take care of their credit, they didn't pay accordingly, and now they're old enough and they're ready and their finances are actually ready to accommodate them to buy a home, but they do not qualify to buy a home because they haven't been paying their credit accordingly. So as a result, then they are obligated to go rent, and rent, pay a high monthly rent, because they can't qualify to buy a house.
Yeah, and the problem is with that as well, it starts breaching onto what we were talking about last week between wants and needs, because some could argue like some things are wants and needs. Like for some people, maybe having your own personal vehicle is more of a want than a need, because there's public transport, there's buses, there's a whole bunch of other things you could do. You could ride a bicycle. But for something like a house is an absolute need. So if you've got a bad credit score and you can't even purchase a house, and you're forced to pay high rental prices for a house, that's a need that you have to have that.
So that's why I'm saying it's important that you take care of your credit. I think one of the topics that we had was prioritizing your debt. So it's important that when you have debt, you prioritize it, you pay it off. Because of you paying off your credit, helps build your credit report and your credit history.
Yeah. And I think the misconception when it comes to the idea of credit and money and everything, I remember when we spoke about budgeting. We spoke about budgeting for your debt. Making sure that you're aware of what money you owe, to who you owe,
right?
How much interest you're paying on that money, and everything involved with that. Because once you can get that down, whether it's on paper, digital, what have you, then you can start planning for how you're going to overcome that.
Right.
And I think the sooner someone is aware of the implications of having a bad credit score, the better.
Right.
But also understanding how important a credit score is. Because like you mentioned,
yes, it is important.
Yeah, you need it if you want to get things on credit.
Right, because I mean, how many of us have like $1 million just floating in our accounts?
Me, I mean, I can.
Really?
If you want me to
just
transfer,
can you transfer?
I can if you want.
No,
to.
you don't have to transfer the whole $1 million.
No. We'll talk about it after this show.
Yeah, but Dylan, there is credit costs that people need to know about. So. It differs from financial institution to financial institution. So you would find that, and this is also another thing that people need to go to the bank and do. Go to the bank and, find out
Ask questions.
How much. Yeah, how much is the initiation fee?
Yeah.
If you need to compare, then you compare. Because it's important at the end of the day, because you are the one that is going to pay all of this money. So we have interest rate that is going to be part of your monthly installment when you're paying your credit. There's initiation fee, there's service fee, there's a default administration charge. So this default administration charge is when you supposed to be paying on the 28th of each month, and then you forfeit and you don't pay on that month, on that day. And then so they will charge you for that, for not paying on time. And that's why when you get a call and then you hear them say your account is in arrears, it's because of you didn't pay on time. Another mistake that you can do is skipping the 28th of September and saying, okay, I'm not going to pay my 150 this month because I don't have enough, but I'll pay 300 in October. This is a mistake because the default administration charge will still come in even if you have paid 300 the following month.
Yeah.
So it's important that we also know that. And there is also collection fee, there's credit insurance, and there's legal costs as well.
Yeah. And I think what's interesting with credit is you're using money to buy something you already have. So say now I bought these shoes on credit. I'm wearing these shoes here now. I have them. So whether or not I pay my 150 on the 28th of September doesn't actually make any difference to the fact that I have the shoes already. So I think so many people get caught in that trap where I'll pay it next month or what have you. The interest goes up. These not hidden fees that they're aware of that come into place.
Right.
But then you're sort of stuck in this trap where, one day I'll pay it off. One day. And then that will keep moving up.
And that is why, Dylan, that we end up paying like an account that you should be finishing in 6 months. 3 years later, you still have it.
You're still paying it, yeah.
You're still paying it. It's because of the defaults that we continue to, and it's our own doing.
Yeah.
We continue to inflict all of these things.
Yeah.
So,
I remember something that happened to me. At some point, I had a gym membership and the monthly debit order had bounced for some reason. There was a problem with it. They ended up they covered the costs and stuff to rerun the debit order. But what happened is a mate of mine and we showed up at gym at like 6 a.m, tagged in, the gate didn't want to open, giving errors on the screen.
Sure.
So then I said, what's going on? We drove all the way here, we want a gym. And they said, okay, sorry, you haven't paid. So for me, in the moment, I was like, wow, so this is the implications. If you don't pay, you can't get into the gym. So I think with credit, we need to almost change our mentality to it because we've bought the thing. As much as we want that thing, we need to be aware that we need to pay for it. And it's going to help us with a credit score. It's going to help us with, I don't know, live happier. If you have a nice house, you know, that's a place where you go and rest. You eat with your family, what have you. So it's going to improve your living, I don't know, your healthy lifestyle.
It'll keep you stress-free. Let me just tell you, it'll keep you stress-free because you know that moment when your phone is ringing and you see credit something and you're like, I'm not going to answer that phone. You won't have those problems if you pay accordingly. Yeah. You pay what you are supposed to pay when you are supposed to pay it.
Right, and sticking to that. Yeah, I think in closing as well, as we begin to wrap up this episode.
Are we already closing?
Not quite yet.
Wow.
Like soon.
Okay.
Time flies when we're sitting talking about money. It's actually it makes sense because money also seems like it flies right up our hands. You know?
Yeah, especially if you don't plan for it.
If you don't plan for it, But we plan for this. We plan for this. So the time's running away from us, but we plan for it. I think let's end off with the safe way to get credit, because obviously there's lots of bad ways to get credit out there. I think let's just lead people the right way, the right and safe way to obtain credit. So
there is a safer way, or a safe way as to get credit. You need to get credit with a registered financial service provider. Because of there's a National Credit Act. The National Credit Act, what they do is they regulate the financial service provider, so that the financial service provider does not go overboard with interest. So there's a certain limit that the Credit Act puts, so that all financial service providers are following through that. But if, for instance, let's say you feel like a certain financial service provider is violating or infringing your rights in terms of the credit that you took with them, then the National Credit Act will then be, your mouthpiece. Then you can go report any mishandling or any mistreatment to them, and then they'll protect you. But if you borrow money from institutions that are not registered with the National Credit Act, then if there is any disagreement between the two of you, you have nowhere to go. Yeah. So this is the protection that comes with using the right financial service providers. And the financial providers are normally, the banks would be the right service providers, the insurance companies would be the right service providers, and then there's also, the furniture shops, the clothing shops, they also would fall under that, because of they borrow money also, although it's not it's not cash as you would with banks or whatever. It's goods. Right. So you need most of the there's the registered service providers that would have like a certificate when you come into the business, and you'd see that, okay, this is a registered institute, then you would be able to borrow money or use their services. Yeah. And I think at the end of the day as well, there's banks everywhere. Yeah. So if there is more information and you want to maybe apply for a credit card or a loan or what have you, then just take the time, is what Lerato is saying as well. Take the time, make sure that you have set apart a certain time where you can sit down and just discuss. I remember when I got my credit card, I probably spent over 2 hours there. I just asked the gentleman, if X happens, then what happens when Y happens? And if Z happens, how does it affect X? I literally ran through all these different scenarios with the gentleman, and he explained it so nicely to me that I left feeling like enlightened and actually, a little bit more knowledgeable about credit cards and credit itself. So that's what we're doing here as well. We're making sure that you also understand credit, and you can better help others and those around you as well to understand credit as well. Lerato, final comments before we say goodbye today? Final comments are, one of the things that you can do to help yourself with your credit or your debts is pay a little bit more. If your installment is 150, just put a 50 rands more. This will then help you pay off your debt quicker or sooner than the term of your contract. So this will help you. But just as we close, I just want to encourage our viewers that we need to apply wisdom when we borrow money. You need to ask yourself some question. Is it necessary? Do I need it? Can I afford to pay it back? And then this will then help you evaluate your financial state at the moment to understand and realize that you will be able to pay back. Because if you are not able to pay it back, then you are calling unnecessary or unwanted stress into your life that you probably don't need.
Yeah.
So it's important that we apply wisdom when we do go borrow some money.
Yeah.
And just as we close as well, I just want anyone, if you are there and you want to talk some more about this, they can WhatsApp us.
Yes.
And our number is 078 485 4838. Let me say it again. It's 078 485 4838.
4838. Because I want to know more as well.
You can WhatsApp us.
I want to make sure I have the WhatsApp number as well. That being said, thank you so much for joining us. Thank you so much to Lerato as well for joining us for the 8th episode of CFE. It's been an awesome one indeed. Remember, the idea around all of this is application. If somebody tells you the stove is hot and you touch the stove and you don't have that revelation and apply it into your life that stove is hot, you're going to be touching that for the rest of your life because why? You're not listening to the fact that is still hot. That being said, from myself, Dylan Hartland, it's a goodbye. God bless you.